Welcome to Markets Now. I'm Michelle Rook with Mark Schultz with Northstar Commodity. Well, it was a lower day in the livestock, grains closing mostly higher. And Mark, let's talk about especially corn and soybeans. We've been seeing this continued push here from export business, very strong, even for this time of year, don't you think?
Yeah, the corn is probably more so the story where the business has been pretty strong. Now, typically it does get to be the good time of the year, but we're right now, year to date of this marketing year, and granted it's early into the season, but our sales are the best we've seen, third best we've seen now in the last 10 years. And it's 300 million bushels greater than at this time than a year ago. So the business keeps coming, and I expect another good sales number, corn and beans, in the weekly sales this week, and probably a respectable number again next week as well.
So Mark, with all of this export business coming at corn and soybeans, why is it that the market can't get over some of these resistance areas on the charts?
I'm not sure. It's rather disappointing that we're not moving more as far as the futures are concerned. I think when you look at where the market is and the production areas, I would say the ones that are going to see some production cuts and yield cuts coming up. It's definitely going to be in the state of Minnesota. Iowa, I think, is going to be a pretty good yield. In there, the northern third of Iowa bean yields were okay, but I wouldn't call them any type of a record. South Dakota, I think, was a little iffy on the beans, where I think the corn has been okay. But you're going to see a drop in Minnesota without a doubt in there in both corn and beans. And whether it's enough, because you're going to be offset by an excellent crop in 2/3 of the state of Iowa and probably 3/4 of the state of Illinois at record yields.
Yeah, so you think we're going to need some sort of surprise in the Friday WASD really to break us out of this range? And if it doesn't come from yield, could it come from demand maybe on corn or not? Upward revision.
Yeah, potentially. I think if you were to bring the corn yield down a bushel or even two, would be a shock for the corn market, for the traders. So that might get you the boost out of there. I think also the corn would need a little bit of help from the wheat market as well. That's one that looked like it was trying to break out to the upside, and then just as laid an egg for the last 30 days and going no place in here. So I think you need that help. We did have the outside possibility creating a weather problem of dryness in Brazil. It went into a very dry winter season there. But as the spring has rolled around, we got off to a very slow start getting the beans planted. Then the rain started to develop, and the planting was going in now on the beans at near record pace here for the last 2 weeks. So they have caught up completely, taking some of that bullishness away, because especially for corn, not so much for the beans, but especially for the corn market.
Yeah, I was going to ask you if Brazil catching up on planting was maybe part of the reason we couldn't get above resistance. Is the other problem just that we have the election tomorrow and there's uncertainty about that, especially on trade and tariffs and whatnot?
Well, I would say you've got some, it's I'm sure on the back of everybody's, on the trader's mind in here, and about virtually everybody's mind, of what would happen. And I think if you look at it in the big picture, my feeling would be that if Trump would win, the odds probably favor there would be more tariffs, and it would probably hurt the soybean market more than it would be the corn or the wheat market. They don't buy a lot of wheat, and they really don't buy a tremendous amount of corn from us either. So then they could get most of the beans and corn, for that matter, out of South America with the big increase in acreage that they put in the ground over the last 5 years.
Yeah. If you look at the fund positions, as of last Tuesday's Commitment of Traders report, funds exited a massive part of their short position in the corn market. They seem to be a little bit more comfortable being short, though, in soybeans, huh?
I think the beans, yeah, it's easier to want to be a little bit more short the beans than it is for the corn in here at this time. And that's just basically because the beans are going to come off of South America. So if you don't have a problem, and right now on both Argentina and Brazil, you do not have a problem. Now, granted, you're just planting the crop at this time, but if the crop gets in the ground, you're probably good for another 15 to 20 days before you even create a weather problem as far as the beans are concerned. So I think that's the issue. And then once they start harvesting the beans, that would be more of a January, February, March time period. then they're going to have to move those beans, and their currency is in a position where they should be able to be much more attractive selling the beans into the world market than the U.S.
Yeah. What about the wheat market? On any given day, it looks like if we get a rally in corn and soybeans, wheat tries to follow, but the dollar's been another factor. Maybe that was a little supportive today. And then what about rains in the Southwest Southern Plains? Did that keep a lid on futures here today, do you think?
Yeah, I think the rain story is probably a little bit bigger, or had the potential to be bigger, because we are getting a huge area of the U.S. that was getting extremely dry, and especially for the guys in the winter wheat down in Texas, Oklahoma, Kansas. Most of that stuff that was getting planted at the end was all going in dry dirt, so it wasn't going to germinate until the moisture was received. And virtually everybody has picked up some rain. Now, in some areas, you may have got too much rain in here short term. I would guess there's probably going to still be maybe 10% of the crop still left to plant. So it's not a big deal. Most of the guys tell me down here they could put the crop in by Thanksgiving, they'd still be okay. But whatever they had planted in the last 2 weeks was all sitting in dry dirt, wasn't going to germinate until moisture was received. And they definitely got moisture. Some guys dumping out as much as 3 to 8, 9 inches of rain over the weekend.
And what are some of the technical points that the funds are watching here that might get them excited enough to maybe start buying in this market, in corn, beans, or wheat? Because like I said, wheat is no exception. It keeps running up into resistance too.
Yeah, I'll start with the corn, and I don't know if it's what the funds are watching, but it's what I'm going to watch, and that is on the corn is 425 on the December corn. If you can close above 425, then you got a fighting chance, and then you have an outside chance that you're going to start another leg up potentially, and that could open the door. Then that a move up to 440 to 455 is not out of the question. On the beans, it's short term. You're going to look at 1010 on January beans. If you could clear that, then you're going to run right into 1025. So I'd say in the bigger picture, 1025 would be the number you'd have to clear to start getting you something more friendly that as a speculative trader would start looking at, say, maybe I got to buy some of this stuff in here. Wheat market, I think right now the wheat's, what is it? Chicago wheat's 570. This 580, 590 area is going to be tough, $6. You clear that, then maybe you've got something else that you can start hanging your hat on the wheat.
And the cattle market, another down day. Let's talk about your thoughts on whether this market is topping, or are we just maybe doing a healthy correction in an otherwise bigger bull market?
Well, let's start with the seasonal tendency. And seasonally, you probably peak out right around this first full week of November. So end of October, 1st of November, usually you get some type of a decline in the box beef prices, which have moved up very nicely. You get a lot of the holiday buying might very well be done by this time. You might have some more of it left to do, but I'd say it looks like that. You move the market up to $190 on December cattle. You've had probably a little over a $5 correction now in 6 trading days. It had a heck of a move up in a short period of time. So you get a pullback. I think the one thing is that at least that's helpful for the cattle is you got the cash market still sitting up here at 188 to 190 bucks. So if the cash could sit here, unless the cash buckles, then my guess is the futures downside is going to be limited for right now. But here too, I think, one always has to be careful. What comes right to my mind is last year at this time, November 1st to December 1st, you dropped 22 bucks on futures in 30 days. It was quite a fallout, and then managed to come all the way back again, but it was quite the fallout.
Do the funds defend this massive long position they have? It's what, over 100,000 now?
Yeah, it's got up there now to right at 100,000, and typically I start raising the red flag of the funds. You got to be concerned when they start topping 90,000 in here. And we've seen them higher. I've seen them up 130, 140,000 on that market. So it can still go up more, but you're kind of playing with fire, because when it starts getting that high on speculative trading, you got to start having friendly news all the time. If you start getting a little bit of a hiccup, you're going to have sell-offs.
Same is true of the hogs. Okay, the funds, if they're not record long, they're near over 100,000 contracts there. Do you think that market topped today here? I mean, we went up, made some contract highs, and then ended lower.
Ended lower. It's just only the second time you've closed lower in the last 14 trading days on pigs. It's been very orderly. But on the technical side, it's 13 weeks up on the hog futures on this rally. And that rally has been anywhere from $12 on the summer months to the upside to $20 to $22 on the nearby contracts. So it's made the move and an incredible move on up. And yes, the funds net long 107,000. We couldn't even find a time since we started tracking this of where the funds are wherever above 100,000 net short or net long. So a little bit concerning on that one. Here too, though, you've had the cash and the cutouts have been good. Cash had a big move up last week, then gave it all back at the end. The cutouts are moving up at 104. They might be getting a little bit more expensive, but just like the cattle, when you get this much length in the market, it's got to keep being friendly news or you're going to get a correction one way or the other.
Yeah, it's been one heck of a counter seasonal move, that's for sure. All right.
And it's been, and we're at extremely good profitable levels for the hog producer. He's at great levels from now all the way to next October. So great profits that he could lock in.
Okay, well then let's hope today was a little hedge pressure. Okay, thanks so much. Mark Schultz, Northstar Commodity. That is Markets Now.